on Wall Street.
Today's stocks will mark the longest bull market in history. Local financial professional Matt Gulbransen from Pine Grove Financial Group joins us now to talk about what we should consider with our money today. Thanks so much for coming in, Matt.
It's a great day to be here.
All right, so let's first of all define bull market. What does that mean?
So bull market is essentially when the market continues to increase without incurring a 20% correction along the way. So most stock market experts, economists will signify a recession in stock market terms when we've seen that 20% correction. So here we are today. It's been 9 years, 5 months, and I think 14 days to be exact. It's the longest on record. So who would have thought that when we go back to 2009, right?
And I think people who were maybe hitting that retirement mark in 2009 were extremely disappointed when they saw the markets drop. Now they have rebounded. What advice do you give people who are nearing that retirement age?
Yeah, so obviously as we age, our money becomes that much more important to us. So all of us, we're not going to be retiring anytime soon, most likely.
It would be nice.
It would be nice,
doubtful.
but not likely, right? So this, although it's important for you and I and us to build wealth, the reality is those that are close to retirement, especially the baby boomer age group, this is a huge significant event, is that they've seen their wealth nearly triple since 2009. So they're more confident, they feel more comfortable, their wealth has never been greater. So it's a great time period for those people.
And of course we know that all good things must come to an end, and that includes this bull market. We don't know when. Can you give us any indication of what might lead to a downturn?
The tough part about investing is we never know, right? And so who would have thought in 2009, 10, 11, all the way, every year, every quarter, almost every week, there's news that scare people and get them to have this knee-jerk reaction to get out. Or
interest rates rising, could that be a factor? That
could, but it's, there's no magic formula. If we had the magic formula, I would share it with you guys and we wouldn't be here. But the reality is that every time is different, and so it's why it's really important to have a plan, have a strategy, understand what you're working towards, and as that time becomes more compressed, like retirement, we need to, that plan becomes that much more critical.
And you have some lessons from the bull market. If we take a look at those, think long term, age does matter, invest with a purpose, and control what you can. So when you talk about age matters and controlling what you can, is it important to diversify?
Absolutely, right? And so invest with a purpose, meaning if you're going to retire and you have $500,000 and you need $25,000 a year to live off of, right? We need to factor those things in. The next person might be completely different. So it really comes down to diversifying, having a mix, but also not try to be short-sighted, right? So we have, as I said earlier, there's all this news, all this information. It's never been easier and more quickly distributed to us. So it's easy for us to have these knee-jerk reactions to sell, get out, think it's the top, think that we have the great idea of why the market's going to correct. But the reality is it's been incredibly resilient, and there's no reason why it won't continue.
It certainly lasted longer than a lot of people predicted.
Yeah,
so
let's hope it continues.
going.
Yeah, absolutely.
Exactly.
I'm with you.
All right, Matt, thank you.
Yeah, thank you.
Matt, thank you so much. We turn it over to Lisa, enjoying this beautiful